All right. Good morning, everyone, and welcome to this live intraday strategy webinar. Today is Tuesday, May 3rd. Michael Boutros with you on the horn. Good to be with you guys today, this morning, on the eve of tomorrow's FOMC rate decision, on the eve of or ahead of a plethora of event risks still on tap, guys. You got the BOE, we've got Friday coming up with CAD employment, non-farm payrolls. It's the first full week of May and a new fresh month. So while there is a lot, and I know I've seen, I think all of you were in the webinar yesterday on Daily FX, there's a lot to look at. We want to be really nimble here. You want to be really selective. You want to be super meticulous on your entries because we have all that event risk still on tap. You're going to go into the lull today as we head into the US close. There's not going to be a lot of people willing to take on a lot of risk right ahead of the Fed. So you likely see that pre-Fed lull start to fall in as we head towards the latter part of the session in the US today. That being said, we'll keep it brief. We got the DXY, okay, on tap, Euro, Aussie, Aussie dollar, gold, Kiwi dollar, SPX, NDX, DJI, got you on all of those, Ty. And we'll take a look at dollar CAD, which has just been a ripper. As far as note, I am trying to buy a stab lower to touch the long-term slope. I assume you're talking about in risk, right? I think we've made a near-term low, Ty. I wouldn't be surprised to see more upside. We talked about this yesterday. It was a perfect trade. I tweeted it live on @MB4X, guys, on my Twitter handle. As it was happening, right into the close, we highlighted that key region. It dipped below and then just slingshotted right ahead of the close to close above. That's your quintessential exhaustion trade. So Ty, I'm not sure what time frame we're looking at, but we'll look at the levels in just a moment. Let's start off with the US dollar. So here's what the US dollar looked like into the Sunday open. I put this on Sunday. The level of resistance is still 103.82. We talked about it yesterday in the webinar. We spiked into that last week, pulled back and closed below. The risk has been for exhaustion, right? It's an uptrend. It's still a very strong stretch. If this is wave 3, do expect you'll make a new high eventually. But at the point we're at right now, ahead of the FOMC, ahead of non-farm payrolls, into the start of a new month, I don't want to get too married to that concept. Here's what it looks like on the daily chart. So straight up halt at 103.82, okay? We didn't even go for a touch for the next 3 days after that. Here we are at this pivot. This is the 2017 high day close, the 2020 objective swing high, all factual, non-discriminatory levels. It has been support for the last 4 days, right? If we close below this today, you look for the larger pullback, okay? If this holds into the US Open, even if it vaults higher, you're looking for the exhaustion trade, okay? You're looking for the exhaustion trade. We're right back at 70 momentum. If we get the break below this level and a close below 70, it's the same as this. It's the same as this. Now, all of those instances were very short-term pullbacks, and that's what we're looking for. We're in a strong uptrend, but the risk is there. Intraday looks like this. Okay, we're getting that move now, looks like, into ahead of the open, seeing a little bit of a drop here. So we're at that level right now. Keep a focus on it. There's no change to any of the levels that we highlighted from Sunday. We opened up the week, tried to push into 103.82 again. We missed it. Right back at support. Right back at support. If we break below those Friday lows, you're looking again for that drop. The median line comes in right near 102.30s, I think is what I mentioned there. So just keep an eye on that, right? And then what does that mean for the euro? Well, similar price action on the euro. I don't remember who it was in the room. We were talking last week, and you were asking, do you think that it might have been you, Ty, or someone else? Do you think that was the low in euro? And we were drifting. We were saying, yeah, I think that might be the low. Looking at it now, it was the low. We dropped right into it, and then into the close of the week, actually that held, and that low is still preserved. So whoever it was in the room who pushed me for that for that bias, it worked pretty well. If we get a break of the weekly opening range, again, the median line, you're looking for 106.37. You're looking for the median line of this trade, which comes in near 106.80s. Here's what euro looked like last night. Okay, wanted to give you an update on that. May open, monthly open, 105. What a nice round number. That's now the weekly open. It's the monthly open. It's now support. We're pushing off that level. The exhaustion, and again, the touch of lower parallel basics. If we break the median line, or if we break that 25% parallel in blue, you're looking for a rally towards the median line. Ahead of that, you have 106.37, which has been sort of a thorn in the side before in euro, but at the end of the day, that's kind of the focus if this does drift higher. It's important to note that this is all within the confines of the downtrend, okay? We're coming off of downtrend support, so we're counter trend trading. Anything on the long side, use caution. Hello, Michael. It's been a long time, not been able to attend your precious webinars, but catching all the recorded dailies is a must for me. Man, great to have you in the room as always. It's a pleasure to see you. So that's where I stand on euro, guys, right now. Favoring the long side, have a little chip on it. If we get it, the breach higher, 106.37, I'll look to do something, go break even on the rest, and see if we can't get towards the median line. But long term, I'm going to go backwards here. Sorry, on euro, it's a big level. 2017 low week close. We didn't close below that. We closed right above that. That's key support. Again, I have to preface this by saying I do think it's not going to be very long. It could be short-lived. At the end of the day, if we break lower from here, there is nothing until 104.48. Okay, it's number 100 some odd pips to the downside. So for euro, it's the level. For DXY, it's resistance. Okay, and we're seeing this manifest on some of the crosses as well. So if we take a look at, I know yesterday I gave you Euro Aussie. Someone brought this up last week, and it's just been picture perfect. If you go, as always, guys, I give you the previous update, takes you where in the article it is. We were looking for a pullback into uptrend support. Fast forward, you got that exact pullback into uptrend support, and the rally opened up the week saying, hey, you know, this has been a 618. Look for support either at that 618 retracement or right at the lower parallel. This is a nice little drop here. You look for an exhaustion low. Here's Euro Aussie now on the pullback right into slope support. You can't make this stuff up. Here's the rebound, right off again. So for all intents and purposes, I'm going to treat this as the weekly opening range in euro. Beautiful trade on the short side, 147.90. If you caught the tail end of that, you know, that was an awesome trade, but out way ahead of that low. Here's the rebound, 618 resistance, still 49.30. I wouldn't even wait for 146.80s. If this breaks the lows, you're likely going to see a larger spill. But at the end of the day, the weekly opening range is set right above uptrend support. Okay, let me just get this on a 2 hours, so you got the consistent picture here. All right, so no change on Euro Aussie, a weird cross that we don't really cover on a day-to-day basis, but the last 2 weeks have been like textbook. Weekly opening range set up right above uptrend support, right into the start of the month. Beautiful setup. All right, so that's 1, 2, and 3. Ty, I didn't notice your question on the 10-year there. I don't really have much to comment on it, brother. I know you've been asking on a daily basis, and I've been trying to get some groove to it. That was the breakout that we were talking about yesterday if it broke. So it kind of broke higher, still exhausting in my opinion. Take a look at the daily chart, some divergence into the high. You know, it suggests a near-term pullback in rates, but I don't want to get married to that idea. Here's the 10-year on the longer-term chart. You know what I mean? We haven't, last week technically we closed above 292. So if you're a stringent rule-based trader, you're actually still constructive here. But boy, man, it's stretched. It's stretched. So I don't know what you're going to do with that, Ty, but that's my opinion. A quick note there on the US 10-year. All right, back over to Aussie. We got a 10 basis point hike from the RBA in overnight trade. Brings the interest rate to 0.35% from 0.25%. You're seeing strength in Aussie, but guys, we've been talking about Aussie support. It doesn't show up so much here on the weekly chart as it does on the intraday. Here's what it looked like yesterday, right ahead of the release. The big support level that you need to notice that we've talked about since last year is 69.90 to 70.12. Okay, that's the objective 2020 yearly open. It's the November lows. It's last year's close low. It's this year's opening range lows. Critical pivot in price, period, end of conversation. That's on the weekly chart. On the daily chart, however, things were looking a little different. Really strong slope to the downside. I tell you guys all the time, I hate these slopes when they're super acute like this because they just don't bear fruit very often, but they can still be a tell, right? And it was highlighting, again, key support here on the daily chart. Now on the intraday, you're riding that slope lower and you're kind of looking for a reaction here, right? We didn't actually get the drop into it. Here's what it looks like on the daily chart. Here's the downside draft into oversold territory. Again, we had the RBA and overnight trade. I'll show you how that panned out. But the bottom line is we opened up the week saying we're looking for an exhaustion low, okay? We're looking for an exhaustion low early in the week. That was the level we're looking for pivot off of, was the 2020 open, that November low. Here's what it looks like on the intraday. Okay, for all intents and purposes, we've turned from downtrend support. We've rallied right into resistance, 71.40, 71.39.7 to be exact. It's exactly where this thing peaked in overnight trade. As far as I'm concerned, again, a weekly opening range taking shape right above critical support. Now, this thing has been in free fall for all intents and purposes off the high. We've already made a drop of more than 10%, was it? 8.2%. You've had a severe downdraft. You come back from overbought condition. If it closes here today, gives us that, at least that oomph. That's the exhaustion. Near-term resistance 71.40. Maybe you get the spike to 72.30s. I don't think it gets that high, but if it does, we're basically looking for topside exhaustion now on a rally higher. That's dollar weakness. Dollar's at resistance. Looks pretty good. Okay. It's very important for me to kind of like impend on you guys. I don't want to get too married to trying to call this the low. We're just recognizing the exhaustive print. Here's the updraft. It's likely to be short-lived. Questions on Aussie? All right. Last from last night was gold. Okay, this one's for you, Eman. I know you're the gold trader. I'm always looking for you on these updates. So gold has been in free fall. We noted this into the close of last week. That was a important close. That close determined the break below 1920, 1903, which was our critical support pivot that we've talked about ever since the March high. Basic 38.2 of the range from last year's low and last year's high close. Perfect area of support, held for what, 5-6 weeks? Once we got that outside weekly reversal, it was red alert, all hands on deck. We just turned from a major resistance level, the yearly high week close, the 618, that was a tell. The close last week was the nail in the coffin. So we're looking for a drop lower. We started the week saying that. That's kind of the theme. 1849 on the weekly charts and 1818 into 1828. Both of these regions are absolutely critical. Absolutely critical. Anything, well, I'm just talking big term picture here. Anything south of 1818 is technically damning for gold. That would suggest this is more than a corrective move. That's 2 equal legs off the high. That would be a break of uptrend support and would pivot us back below the 52-week moving average. All disastrous from a technical standpoint. Amen. Love it. 1828 is also the objective yearly open. I remember that vividly because I didn't put it on because it was right on line with our 618 retracement. The levels are spectacular. What we're doing now is we're going into that first area of critical support at 1850, start to dance lightly. Here's gold on the daily chart. Here's what gold looked like. Oh, last night's update was just the intraday, but let me show you the daily first. All right, here is the same slope we've been following from last year, no change. Okay, except for a little bit of offshoot there. No change, but that puts uptrend support right here with the 2021 high week close, 1849. The low we registered today was 1850 proper. So, you know what I mean? We're like there. Maybe you get the draft lower into 1850, but the immediate decline is focused on 1850. If 1850 spills, it's likely going to be another drop, another spill, another break type of trade. That's where you look for the sort of washout down here. Okay. I'm very respectful for where we are in time. Okay. Where we are in price. I'm not positioned on this, just as a disclaimer. I'm looking for the exhaustion low. We might miss it in that it might pop back above 1877 and then you get a larger rally. You kind of missed the low already, but there's not enough conviction, in my humble opinion, to fight this downtrend yet. Intraday chart looks like this. The initial cusps of it look good. Again, there's some divergence into that low, one below, oversold, one above. You know, the hallmarks are there for a rebound, but is that going to be the low? I would expect something more like this before we start to get any larger recoveries. Something like this before we start to get larger recoveries. So I'm dubious of it, still thinking we possibly get the draft lower. Now, if we get, you know, dollar weakness, really dollar turns over more aggressive, that might be the floor that puts, you know, maybe a softening of the downtrend here in gold. But at the end of the day, the idea is look for that exhaustion low. Near-term resistance 1877, 1897 is bearish inval. That is the weekly open. That is the May open. That is right on slope resistance over the next couple of days. Questions? All right, that is gold, number 4 and 5. Right on. I'll take a jump back into, well, really quick, Ty, you've been asking about silver. I just wanted to show you what silver is doing. It's the same trade, although much more treacherous, in my humble opinion. I don't really track this as closely, but it has shattered all support targets that we were looking at. We're below the yearly open. We're below, I mean, all kinds of technical factors. Even if you take this out to the weekly chart and take a look at silver, you're basically just trading into the yearly low, okay? So I don't really have a very strong opinion of how to approach silver at this point. It's one of those trades that which could see a very strong, again, rebound off the yearly low, you know, below 24. I think you're still at risk. It may be a decent trade, but I think the gold one is a little bit clearer in my humble opinion. Me also, I'm waiting a wick spike lower if we are lucky to let us be in. Yeah, man, I'm with you in that kind of mindset. I can tell you over the years that mindset I've missed a lot of trades because of it, but I'd rather miss a trade, guys, than regret being in one. So with something like gold and something like these trades, which are runaway trades, which have really stretched, you're heading into the monthly open, there's major event risk on tap. Prudence pays. Can I have the gold pictures again? Yeah, Ty, right here. It's the same as the report, man. Nothing's changed. Here's the weekly. Here is the daily. All right. And here is the intraday. All right, number 6, Kiwi dollar. So Kiwi dollar is in the same state as Aussie was, okay? And the focus of Kiwi was basically what we're gonna do into the weekly open as we opened up right at this support. We've dangled below it. We're kind of skirting below right now, but the focus still is on this major pivot zone. Here's Kiwi dollar first from the weekly charts. The level is 62.24 into 64.56 out here, okay? It's a little bit tighter on the daily chart, but peep me real quick. This is the 2018 low, objective level, 618 extension from the high, objective level. And you know, we dropped right into it and closed right there last week. So here's this week's candle, real tight into, into support. Into support, lateral level. Anything beyond this, you're looking for 63. 63.13 is gonna be the 2019 low week close, okay? So from here, where we go, here's Kiwi dollar in the daily charts. The focus into the start of the week was to look for an exhaustion low early in the week. Haven't gotten that conviction yet. Here's the key range that we were talking about. I mean, this is the daily chart real quick. Same levels. I know they're really stacked up here, so let me just kind of open it up for you. But resistance into 65.38. That's the low we close from January, right? You saw the accelerated candle drop there on 28th, took us into support. We've been sitting here ever since. Slope off the highs. Got a parallel off that from the low that you made back in late March, one. And then what is that, like 3 touches, maybe 2 touches? Some merit to it. Again, it's that really acute slope. It's a very similar scenario to what we're seeing in Aussie, right? Better reaction, but the RBA helped there. So we're at support. Here's Kiwi on the intraday chart, and here's what it looked like earlier in the week. So right into the Asia Open. I mean, I write this early on Sunday, guys, before the Open, so you guys kind of have a picture of what we're looking at. But that was the whole idea, to open the market, look for support in Kiwi on the initial drop. Here we are. Weekly opening range is preserved. It's only Tuesday, so don't get too excited. If this does break to the upside, you still have to contend with 65.38. Like I said, that's the pivot. That'll give you a little bit more of an upshot if we get it. But anything beyond here, it's 63.47, and essentially, again, on the daily chart, you're looking at that 63 handle on the downside. Questions? Number 6. All right, let me hit real quick dollar CAD, and then we'll just jump straight into equities because there's so much here, guys. We've made it such a big reversal yesterday, so I think there might be more upside. Dollar CAD looks like this. First on the weekly chart, woo-wee, what can I say? What a breakout. What a breakout. Near term was really clean. I warned you about this yesterday, and the level is 129. Okay, I know Jamie's really big fan of 130. I got lots up there too, but ahead of that, we've got the objective yearly opening range highs, 129 proper. It's basically where we just petered out. On a weekly standpoint, you would need to close above 29 to continue favoring the immediate upside. The immediate upside. You know, I think it's a bullish trend. No one's argued. This is the same formation, guys, we've been following since last year. And great support hold, but where are we now? We're at the median line. We're at the objective swing highs for the year. Possible resistance? Why the hell not? Right? Dollar's at resistance on its own. So could be a little bit of an interruption. We've had what, 5? This will be the 6th up week if we had it in a row. If it bucks it, it's going to buck a 5-week snap. Could get a pullback there. Okay, dollar CAD on the daily chart. We highlighted this yesterday as well. It's just so, again, you can't make this stuff up. Even the stretch, 129 was a 1618 extension from the advance off the lows for the year. 1, 2, 3, just from last month. There it was. Also, again, the objective yearly opening range highs. It's the high that we made last month, or back in March now. So we're at resistance. We're at resistance. And on the near-term chart, it looked even cleaner. Here's what it looked. Here's what it looked like last week. Okay, 128.80, 129, looking for resistance up there. Boom. Ran right into it. That's where we found resistance. Weekly opening range is preserved right below major resistance. If we break lower, you're looking for that stretch towards the median line. That kind of drifts up a little bit higher now near 2780s, just below the 28 handle. But big levels here. Big levels. This is your, sorry, my marker got erased. That's your weekly open there. Just keep that as a pivot, but keep a close eye on this one. I'll be watching this one. Again, I want you to be very careful, specifically heading into the end of the week, because you have non-farm payrolls and Canadian employment figures released at the same time at 8:30. Iman says, I can trade through my bank with high commissions, but not through FXCM anymore. Can I get advice from you, please, other than setups? Iman, I don't really like to, you know, tread anyone towards each broker here or there. I've worked for pretty much all of them. So I trade with forex.com. I used to work with them back in the early 2000s. You can trade with IG, which owns Daily FX now. Tasty Trade is going to be onboarding FX as well. So they're going to be something that are going to allow that as well. So you have options. You have options. Yeah, I can't, from the loss standpoint, I can't give you any, I have no knowledge on that, Eman. I'm not gonna even touch on that. But as commissions, whether it's the commissions or the spread, that's the most important thing if you're an active trader. Obviously, having a reputable brand is always helpful, but you should be fine with any of those major ones. I wouldn't really worry too much. All right, so that is dollar CAD. Any questions on Loonie? This is going to be big heading to the close of the week. We're coming off of uptrend resistance. Pull back looking for support at uptrend support. Initially, that comes in near 2780s. All right, let's jump into the equity markets because this thing's been superb. Here's what the equity markets look like ahead of the Asia Open. I can't stress these weekly charts enough. I've been showing you guys these for quite some time. The break of broader uptrend support was validated 2 weeks ago on the SPX with that move below 43.09. We've been looking for that move towards 42 and the yearly lows. So from a weekly standpoint, all we're doing is defending a bounce off the yearly low. Okay? Don't start making any major extrapolations if we look at this objectively. Now, when you look at it from a slope standpoint and a trading standpoint, I'm looking for 39.24. I've been saying that for a couple of weeks. It's still far out. It's 2 equal legs off the high. It's slope support. If you look at a lot of other different charting time frames, it becomes even more of a major level. So where are we now? Here's SPX on the daily chart. And here are the levels I've been showing you guys right here. Okay, so the first level is 41.17. That was the May 2020 low day close. We scratched it here on the yearly range lows in February. We dropped into it yesterday. And this is when I was tweeting. We were way down here. So watch the close. Right ahead of the close, popped right back to close above. Classic defense. Now, it could be a very short-lived bounce and then resumptive move. Once this breaks, and like I said, I think it does, eventually 39.24 becomes in focus. If it doesn't happen over the next couple of days, could be into the close of the month, into the start of next month. But point being, that's going to be a critical region. It's also the high day close from back here on the opening range for the year last year before it broke out in April. So the levels are superb. What does that mean for us right now? It means right now you're looking for possible sideways action, maybe a little higher. Ultimately, you're looking for near-term exhaustion on the long end. Okay, I'm looking for an exhaustion high. First levels, unfortunately, you have some room. The median line doesn't come into like 42.65, 43.09, still key resistance. Okay, here's the 240 minutes to zoom this out a little bit. Maybe a blip higher. I don't think you get that high, but to fade, and then the bounce would eventually get us into 39.24, or the break rather would get us 39.24. But not surprised to see some bounce here, especially how yesterday closed. Okay, so it's the day ahead of the Fed. I'm not expecting any fireworks. Okay, where do you think the rally will go to? That's for me, that's where retracements come into play. So if we take a basic 38.2, it kind of gets messy. It turns right ahead of 43. It could converge on slope. It's quite a hike. There's a lot of downdrafts. I don't know what would necessarily make us rally that high. Maybe the Fed comes out tomorrow and kind of tamps the brakes. Interest rate expectations are freaking crazy right now. Okay, people calling for 3.5% by the end of the year. I mean, this is getting ridiculous. I understand that the inflationary concern is primary, but is the Fed going to just straight up like put us into recession? That's a gutsy call. My humble opinion, they should. We're way off, way behind, and inflation is going to be a major problem for the next couple of years, in my opinion. But that's just me. So it could happen, Ty. There are another channel starting at 43.10 high. This one. Are you talking about this high? That's really tight. That's really tight. you could do something like this. But remember, any 2 points can make a trend line. It's the third that confirms. So, I mean, you could fight, try to call that channeling action, but even if this breaks, I don't think you're going to get the slingshot. Could be. There's some fishing here. Looking higher. Looking higher. We'll have to assess the high as it comes high. Instead of targeting what the bounce could be, we're watching price action because it's just very early in this session, both in the week and the month, and you want to be cautious. It's a very big defense. Guys, at the end of the day, if 41.17 gives out again, I think this is going to be a slingshot. So we have to respect the pivot nature of this critical zone in SPX. Does that make sense? Amanda, I'll give you a quick update on where I see Bitcoin now as well. I'm fishing for a low. I think we break. I think we break lower. I'll show you some levels in a minute. SPX, okay? NDX, similar scenario, okay? The level for NDX, or NDX rather, closed below and broke into a fresh yearly low yesterday. So this is playing a little backlog, okay, with the reversal taking us right back above 12,947, which was a 38.2. It was a big zone that we were watching for quite some time. Here's NDX and going backwards here on the weekly charts. Big support zone from 12,668 into 12,947. It's a 38.2. This is the 2020 low week close. Objective, not my opinion, not Jamie's opinion, fact. Okay, we're there. Could see a bounce, sure. But we did just break the yearly range lows. 2 equal legs off of this trade takes it down to 11,520. The 50% retracement of the 2020 rally is 11,768. You see what I'm saying? So there's such key targets on the downside that you look for this bounce ultimately to be sort of not resolute rather, and kind of faded. But it's so early in the month and so early in the week, it could get a little bit more updraft than you would expect. On this one, 13,724, 13,948, both levels for me, of which if we get into it, start to look for possible exhaustion. On the downside, if we break that 12,688 level, which is the bottom draft of the weekly chart, right? That's like this zone. You start to look for that bigger drop towards 12,439, 1220. That's the 2020 highs from October. Really nice pivot. Look how many highs, breaks, support. This whole zone is pretty key. So near-term bounce, by the way, just standing out from 1,000 feet. If you look at this right now, when we were closed the market today, it's an outside reversal candle. Okay, or excuse me, yesterday was an outside reversal candle. So in and of itself, giving you that risk for, again, some near-term exhaustion. Remember SPX, every time we've seen an outside reversal, it's been a decent trade on the daily, right? NDX, 4-hour outside reversal. If it closes the candle here, or it closed the candle here rather, you're looking for that draft higher. So both of these are giving us the downside exhaustive signal. Add to that some divergence, right? So it's there on the 4-hour, it's there on the 2-hour. That actually closed out yesterday an outside reversal before we even closed the session, which again is a near-term sort of exhaustive punch. But don't get too excited because the upside shouldn't last all that long. Dow Jones, last one here, cleanest of the lot. Yesterday dropped right into 3250. Literally, right? No change to the NDX levels, guys. Here is DJ. We dropped right into that and bounced right off. The two levels we were looking for was either 3250 or 32,530 or 32,272. Obviously, slope converged there first. Here's the bounce. Near-term resistance, 33,612. Max, 34,33. I don't think you get there, but max. And then look to sort of reassert possible short side. A break of the lows here is one of the most detrimental of the lot for equities. Okay, the 100 here in Dow takes you down to 30,812. And again, that's just my humble opinion. If we break below 32,272, that's the risk. It's the risk. It's another 4.5% down. From where we are now, that's another 7% down, right? So, man, the levels have been so clean. Stick with them, guys. Tread lightly and watch these opening ranges as we set up the monthly open and major event risk on tap. Tomorrow's Fed interest rate decision, guys, man, Powell's got to thread the needle, okay? He's not only going to have to set interest rate expectations on a more reliable path, but it's all about QT, quantitative tightening, and how they're going to offload the balance sheet, what that looks like, the amounts, the timing. Markets right now, I can just tell you from talking around with guys on the desk here in New York, a lot of them are expecting a June. I think that's kind of in the books already. Amounts are varying from 50 billion to 70 billion. Some people are saying they're going to tail off real slow at 20 billion because of what's going on with the markets. I don't know. This is the conversation for the fundy guys. They can sit around a coffee table and discuss that all day. I'm looking at the trade. Right now, markets are super priced for high rates, even as high as 3.5%. In fact, if you take a look at the CME, and I showed you this, I showed you this yesterday, and I showed you this yesterday in the webinar, but if we look out for December, I keep checking this every day to see what kind of shift we get. It's starting to taper off a little bit, but we were starting to really push towards 3.25%, 3.5%. I mean, it's getting real priced out. So if this softens, that's all to say, guys, if this begins to soften, kind of jives well with what we're talking about, the DXY possibly giving us a little bit of a pullback here before resumption. All right, so that's all I got. I'm gonna try to run through as many questions as I can, guys. I'm on a tight time frame today, so I'm gonna take your questions in the order. Bitcoin, listen, the technical damage here is done, Eman. What do I want to say? So here's been my line in the sand. Was the August swing low from here. We kind of tried to mount an assault here, and the close low from that February was right in that zone 2. The drop you're seeing here, you're not seeing the kind of reaction you would get. I think you could get some sort of meaningful rebound off that level, but the tone of it, the move of it, screams bear flag. And if that's the case, a break lower from here, you're looking for like 32,000, you're looking for like 29,000, and that's levels if we get the breakdown, the panic, amen, sell-off, where you need that panic. The low is not registered as long as people are, it's an orderly decline. We need that panic sell-off where people are like, oh my gosh, that's the washout, and all these guys, that's where you start to see people giving up. And once people start to throw up their hands and say, oh man, Bitcoin's, that's usually the low. But too many people are fishing here. It's coming up in the headlines too much. We're at support. Typically, that's not when a low will manifest. So, man, I'm telling you from a sentiment standpoint, I'm telling you from a trading standpoint, just from like talking with guys, what their takes on the conversations that come up about Bitcoin. It is just my humble opinion. If we see a break below 37.3, look for a larger dump. What would turn me, and you're not asking this, I'm just kind of coming up off my head, what would turn me bullish would probably be a rally and close above that outside reversal candle at 40,470. That tried to break and push through and kind of buck the downtrend, and it was a massive reversal. It wasn't a reversal candle, but it was a massive outside candle. And not only that, again, don't take my word for it. Once we moved lower, we came back to test it as resistance, and that's exactly where it failed. So that converges on uptrend, okay, a little bit later on. So let's say a rally through 40,500, 40,470. That's what would turn me a little bit more constructive. But till that happens, I think it's a little bit late here in the game. Ty, target for the rally in the SPY. So Ty, I already gave you all those levels. You can see the repeat. I got to go through some of these and try to get some for Marcin before I close out the session. Euro Swiss, ew, Marcin, come on, man. Euro Swiss. I'm playing with you. Wrong charting package. So let me go back here. Yeah, there's nothing for me here. This is a contractionary range. Marching, look for the breakout. I've heard for some reason the interns love this trade and they're always talking about it. But I think it's because they've been watching it for the last couple of months and it's been in this coil. I'd be looking for a near-term breakout. Holding this just on account of where it is, I'd favor the long side shoot for the larger recovery, just because you're coming off a downtrend resistant support, more of a rally towards downtrend resistance. But I'd be watching that early in the month. There is a gap to fill. Where's the gap? That gap filled, if you're talking about this one. I don't have a gap that's unfilled in Euro Swiss 140.20. The 4 hour. Ha 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 ha. I see you. Yep. So, you know, that's at the 618 actually. That's at the 618. Oh, that's an old retracement. Sorry about that. Right here. That's where you need to fill the gap. Yeah, 104.31 I got. So goes in line with what I just said. Near-term consolidation, favor the top side break. I think that's a conservative target, to be honest with you, if this breaks out. I think you get a larger stretch, but certainly is a nice level to fill. Yeah. Let me just stoke out one more thing as well here. Watch that. She's not the cleanest. Possible slope and play right ahead of that 104.30 gap fill margin. Keep your eye on that. I know it's just the swing high, but it's the 618 extension of the low. It has already given us a reaction and it converges on slope over the next couple of days. So I think that's going to be the key to the top side pop. Excuse me, if you get it. Even if we're a little bit more conservative, kind of converges all here. See that? Watch that. If you get the top side pop, that's another, you know, what, almost 100 pip, 80 pips to the upside for that 104.30 target. All right, Marcin, next up. Oh, so let me write this stuff down here. That was Euro Swiss, Aussie Swiss. Oof, that looks like exhaustion. So the key level, I mean, you're keeping me on point with these levels because I don't really watch this trade, Marcin. I literally bring this up just for you. And we obviously highlighted 68.33 a while back. That's exactly where we materialized the low. Exhaustion all up into that median line. This thing, let's clean this up a bit. Ugh, okay. Okay. Today's high matters. All right. Oof, it's a 618. Geez Louise. Wow, that's insane. Okay, watch for a break of the weekly opening range here. Support's at 68.33. I mean, same level that we looked at in the daily chart. I'd still keep that in play because I know it's going to be a break of uptrend support, but we've already compromised this. The slope still seems phenomenal, even on the top side breaks of uptrend resistance. Support, support, break lower, acceleration, breach higher, acceleration, break lower, acceleration, resistance, and then whatever the hell that was. So point being, this is important. Treat it as a range until it breaks out. This is a pretty big level. Pretty big level. All right. New Zealand Swiss. Looking for support. Downside's looking a little bit tired here. Looking for support. The 618 comes in at 62.43. Not quite there yet. A measured move from the highs gives us. Oh, wait. Man, Marcin, I should take your questions more often. Please do feel free to throw out any radical exotics anytime you want. This is stellar. This is stellar. 618 of the rally. My favorite Fibonacci confluence is 100% extension of the decline. Gives you 62.43 into 62.59. Big level. Big level. Okay. If this pivots lower, you're talking about the invalidation of the yearly opening range break at that point and possibly sort of a resumptive move lower. It's a big call, but that's my conviction on a key threshold like that. I'm not going to redo it on the intraday charts, but I do want to see if there's any slope on the downside. Ah, crap, it's too much. Could be. This is big. Watch for a pivot along 62.43 into 64.60. I'll write that down. 62/60. Big. Okay, cool. What was the list comprised of next, my man? Pound yen looks like this. A Widowmaker. What is this? Oh, that's the extension of the low. Okay. Don't want that anymore. Okay, it's the yearly range. All right, nice and tight. Where are we now? Big exhaustion. Was that some sort of major resistance zone? Oh man. All right, pips away from the 618 of the drop from 2015 multi-year fib in play. We turned just ahead of it. Here's the pullback. Wave structure doesn't look so clean. I don't have a very strong opinion on this, Marcin. Put a pistol to my head, say you look lower. 57, 60s, 56, 60 is going to be the objective 20, what is that? 2018 open, I think, 2018 high. And then look to reset. You know, it's way too early to do what I'm about to do, but just for reference, if it's going to be just a corrective move lower, the 100 gives you 55. Okay, the 618 of that is basically 58.80. So again, pistol to my head, I would say a little bit lower first before you look for the resumptive move. No, it's too far out. So look on this recovery, 165, maybe a little higher. I bet you that's the 50 right there where we're at. Yeah, it's basically what we ran into last week. So Martin, take these levels into account here. It's an interesting trade. I like to trade things with structure, with slope, things that have a decent, well-defined gradient, market path. This is kind of like, we're pulling at straws here. But what I would say, well, you got some slope here, but again, we're drawing at straws. But I would say that the risk is still for like another test of that low. I'd be hard pressed to think that was kind of it before resumption, but we'll see. Hope it's in the making. Would love to see a Head and Shoulders play out. I mean, it's the hallmark is there, but March, and I can just tell you objectively, brother, from being in the business for so many years, every single high, low, high marks someone screaming for Head and Shoulders. It's just the nature of the beast. It's just something that everyone wants to look for because it's such a readily identifiable, easy to kind of grasp notion. But we have no tell. The only thing that matters in a Head and Shoulders play is the break of the neckline. Until it does, it could just be a simple high-low high. So that's all I'll say. Having said that, I'm with you 100%, bro. If this breaks, that's going to be a beautiful measured move for a couple of hundred pips. You'd probably be able to play. But until it does, I just want to haul to that expectation. Don't front run that too hard. All right. Last but not least, so that was pound yen, the Widowmaker, and last but not least, you have Kiwi CAD, New Zealand CAD. Ooh, it broke that support we highlighted. Ooh, oh goodness. Oh goodness. Okay, so well, we're in trouble here, or the bulls are in trouble here, I should say. It's a break of the yearly opening range lows that we made last week. This was the big measured move, 2 equal legs off the high, 83 into 82.96. I remember you asked about this before, Marcin. It might have been last month. That's a huge level. The fact that we're below it now is not good. However, man, we're in oversold territory too. I got to find you some new levels down here. Low day close. Low close. And the lows. So when you bring something like this to me, Marcin, I just, I don't want to chase. It's a downtrend. I mean, I can't even get interested in a short down here. So I don't have a very strong opinion on this. I mean, an objective break of the weekly opening range would buckle back above 83.16. That would be near term constructive. Do you really want to try to fight this? If it buckles above 83, I actually wouldn't be too far. Yeah, guys, I counter trade all the time. You just got to recognize what you're doing. In which case, when you're counter trend trading, you're taking 1/3 or a quarter position size that you typically take. I've done well with it before, but on these trades, you have to wait for the technical focus to shift, the trigger to tell you, oh, we're shifting, we're moving higher. On this one, until you clear 83.13, it's treacherous. It's treacherous. All right. I went through all of them, Marcin. I got you on all of them. All right. And Ty, you didn't ask about it today, but I was expecting you to bring up oil at some point. Here's the oil trade, guys. We're going to see a lot more sideways price action. Like I said, I think this is still going to be in consolidation mode for some time. 100 is the line in the sand. That's also the weekly opening range low. Keep an eye on that. If we breach higher, I think you get the resumptive move here in the next couple of weeks. But until we do, maybe a little bit more of a coil. Stronger oil would also help us in the dollar CAD pullback since we're at resistance there as well. Ty, looking for a big washout to buy. I think everyone is, but that's the problem. And that's why when there's that expectation, that's when market dynamics tend not to give us the move that we want to see. Do you expect the washout in next several days in the S&P or bigger rally now? So right now, like I said, Ty, we're coming off support, brother. So you could go sideways above 41.17 on SPX. You got to respect the possibility for some recovery above 12,947. Got to respect some recovery. Dow above 32.6, huge level, 32,600. Got to expect near-term recovery. Okay. That's my take on things. I will try to keep you updated on MB Forex, guys, on my Twitter handle. As always, look for some news coming ahead, guys. I'll keep you guys updated on everything as it comes through. And I will see you guys on Thursday. Best of luck trading. Hey, tomorrow's the Fed. Heading into the close of the markets today, clean up your sheets, okay? Clean up your positions. Make sure all your stops are set. There's likely to be, like I said, a lot of volatility. And then even after we clean out the Fed, we still got U.S. non-farm payrolls and CAD employment. I'll give you guys the preview of that on Thursday. Yalla, best of luck trading. Talk to you then. Cheers.